Good evening, guests of the Symposium. Good morning, sorry. So, ladies and gentlemen, it is my distinct honor and pleasure to introduce Mr. James Mwangi. James Mwangi is Dalberg's global managing partner, overseeing the activities of the firm's 11 offices and more than 120 staff from his base in Johannesburg. He has served a wide range of clients, including governments, multilateral institutions, private foundations, major investors, and corporations across Africa. James has helped new organizations ranging from think tanks to private equity funds to develop business plans and implement launch strategies. James has also led strategic reviews of several financial institutions, seeking to stimulate development in Southern Africa via their investments. He has advised East Africa's largest bank on its overall strategy and helped 2 West African heads of states to create new decision-making processes. Prior to joining Dalberg, James was a consultant at McKinsey & Company. He holds a degree in economics from Harvard University and has been awarded the Archbishop Desmond Tutu Leadership Fellowship by the African Leadership Institute. Mr. Mwangi has a plethora of knowledge and insights, and I am sure we'll all get a lot out of this room, a little more enlightened than when we arrived. Ladies and gentlemen, please welcome me in giving a warm and hearty welcome to Mr. James Mwangi.
Do I need to use the microphone at all? Is this for recording or anything like that? Okay, okay, fine. Good morning, everyone. It's a real privilege to be here today, and first of all, thank you, Ian, for that unreasonably kind introduction. I will try to live up to it. First of all, to all of you who are visiting South Africa and Africa, either for the first or other time, welcome. It's fantastic to have you on the continent. I think it's one of the most exciting, well, sorry, I misspoke. It is the most exciting place to live in the world today. And hopefully in the conversation we're going to have right now, we'll explore a little bit of why that is. Looking at it through the lens of poverty, which I guess is what you are all here to discuss today. Before we get into a whole dynamic where I will talk for an hour and you will sit there and listen and some of you might doze off and so on, why don't I ask you, all of you participants, to give me a sense of what you've learned so far about poverty. You had a number of people speak to you. I actually had lunch yesterday with Dr. Moyo soon after he came from speaking to you. And I'm sure you've heard from other really compelling speakers. So maybe to start off, I would love to hear what are a couple of thoughts from around the table on things you've picked up or things that you're coming into this discussion or going into this discussion with when we talk about poverty. And you're from some of the best schools in the world. What does poverty mean to you? Anybody? I will pick on someone if I have to. Yes. Sustainable, step by step. You need a strategy to tackle poverty. Something that someone has learned or is starting to think about that was different from what you thought before. Any changes, any surprises from what you've heard? Sorry, what is your name and where did you come from? I should have asked. I'm from Karachi Grammar School from Pakistan. Fantastic, thank you. Another thought to get us started? Sir.
I think something very insightful, especially from yesterday, was how Dr. Moyo talked about how even though he had to walk barefoot to school, he didn't feel that he was poor. And then us labeling that this group of people are sort of poor is really taking away their self-esteem, taking away their credibility and their ability to actually work for themselves and feed for themselves. So
right.
They're treating them as if they are helpless, they are incapable and things like that.
In a sense, you're taking a fully formed human being with their own self-worth, their own dignity, and turning them into a target for you to help and shape and lift up they kind of, they don't need you to pick them along and take them where you're going. They kind of wanted to go in another direction. And to the extent that your role in that is maybe to help them realize their own potential and move forward. So that point of dignity, we'll come back to that actually in a bit. One more.
My name's Adam. I'm from Montgomery College Academy in the U.S.
Yeah. Whereabouts in the U.S.?
In Tennessee.
All right, very cool. Go ahead.
One of the other things that I picked up on that you said a lot yesterday is the question of dependency.
Mm-hmm.
And aid, it's good to supply aid, but it's not good to shape someone's life. So, because if you end up making all the actions in someone's life, they never learn independence to develop a community on their own in the future.
Absolutely. Again, something that will come out as hopefully I suspect, in some of the examples that I'll share. One last one, please.
My name is Popo. I'm from Ghana,
Yeah.
and I've been in Djibouti.
Mm-hmm.
I think one of the most interesting things I picked up from yesterday's talk with Ms. Moyo was the role of socialization in intergenerational poverty.
Mm-hmm.
Because I actually never thought of it like that. It's easy to think that just because maybe someone lives in Johannesburg, there are lots of opportunities, and that just not making it.
Right. So the power of social networks. Sometimes poverty is only a little bit about the balance in your bank account. It's also about who you know, what opportunities you're aware of, how you're connected to those opportunities, right? It's the social capital that you bring into the world. So let me do a very quick introduction of myself and the work that I do. Or rather, myself and the firm that I work with, and which will give you a sense of where I'm coming from. And then I'll talk about three, I'll call them experiments. I don't think anyone who comes in and says we have an answer for solving poverty is lying. Because if they had the answer, why is there still poverty? We have experiments. We're all learning every day. And so I'll present three experiments that we've been involved with, what I think we've learned from that, and then lay out a few lessons at the end and open it up to see whether there's other lessons that we can all derive together, or whether some of the lessons I've drawn from all of this are wrong, because I suspect that this distinguished group of international thinkers is going to have some interesting things to say. I look forward to a debate. Indeed, I'm hoping for an argument. So, as Ian said, I work for a firm called Dalberg, which today is really part of something we call the Dalberg Group. And I'll say something about my background and how it came into this. I was born and raised in Kenya, like my friend there. Went to university in the United States at Harvard. Was very keen to work in a professionally challenging environment, but wanted to give back. So first ended up working at McKinsey for a few years, which is a consulting firm, and then joined a few other people who were starting a new firm that was going to focus primarily on the challenges of development, sustainability, and equitable growth. The idea was we would only take those projects that we thought were attacking the main challenges facing society. There were three of us at the time. That was 10 years ago, and today we cut across three businesses. The first is Dalberg Global Development Advisors, which I have the honor to manage. And what that is it's a consulting business, and we work with a range of clients, as Ian said, often asking, they ask us a question like, how can I engage with a developing country, or how do I manage my country, or how do I invest in a particular opportunity in a developing country? And we do some analysis and we come back with an answer or some advice. Maybe not the final answer, but some advice that hopefully gets them further along. D Capital Partners is a new business we formed that actually starts from a different view, which says actually a lot of the challenges in development are about investment. And if you can find a way to bring investors to developing countries in a smart way, you can create a lot of opportunity. And finally, Dalberg Research, which says one of the big things that countries lack, poor countries are primarily poor or are largely poor in information. And what's missing is we make a lot of decisions in Pakistan, in Kenya, elsewhere, based on guesswork. How many poor people exist? How many cell phones are out there? How big is the opportunity for one or two things? And so if we can focus on filling that gap with actual data and not rough estimations, we can make much better decisions over time. So that's what Dalberg is. It's those 3 pillars. We've been fortunate. We've gotten to be pretty global. As you've heard, 11 locations around the world and a pretty diverse group of people. I hope I have a colleague from every country represented around the table. And we're always trying to attract more because we believe that what we're trying to do is attract young, driven people who want to focus their talents on development. So enough about us. So I'm going to talk about 3 approaches or experiments in addressing poverty. And the first one speaks to the question of poverty as, when we talk about poverty, ultimately the first thing people think of is, do you have a livelihood? Is it sustainable? Are you generating an income? And the first picture I'm showing here is about the fact that the key in many countries to creating a path out of poverty is small business or small enterprise. That's where the majority of people in any country work. That's what generates the bulk of income. That's what generates the bulk of growth. The biggest difference, one of the biggest differences rather, between a struggling African economy and, say, the economy of Germany is the number of small businesses that you see starting, growing, and transitioning into becoming larger enterprises. Let's look at South Africa specifically. And here I'll talk about a piece of work that I've been involved with. We estimated there are about 6 million small enterprises in South Africa. But only 17% of the owners of these businesses have formally registered them. So it's a big shadow economy. For 67% of small enterprise owners, it's their sole source of income. And indeed, across Africa and across the developing world, you either become entrepreneurial or you don't eat. Right? There's no social safety net for you. If you're not generating an income by selling your services or selling goods in some way, shape, or form, you will starve. And so people say, oh, they're small businesses, but actually no, these are subsistence efforts. 1 in 2 small business owners start their businesses because they had no other alternative. You're doing it, like I said, because you need to eat. Right? Now, what does this mean? It means that when we talk about small business, you're talking about a lot of people struggling to grow something. Very few of them really getting to a point where this business is generating enough for them to have a buffer to invest in their children, to invest in their futures. And as a result, if they're living always day to day, they're stuck in a trap. They're stuck in a little bit of a poverty trap. And hopefully you've had a bit of a discussion about that. Now, when you ask people what is it that prevents small businesses from growing, the first thing anyone says is, well, they need access to capital. They need a loan. They need an investment. That's kind of true. But as with many problems in poverty where people say the answer is money, it's only partially true. Very often the reason that a small business cannot get any bank support is that they don't have any decent accounts, they don't have a real business strategy, they don't have an understanding of their market, and they don't have networks that will help them think about growing their businesses. And so going around and telling the banks, hey, you should lend to that small entrepreneur without addressing these issues isn't fixing the problem. So what we've been trying to do through one of our programs is to say, let's actually match entrepreneurs or small enterprises with the support they need to be smarter about their business, to access markets more smartly, and to build the skills and networks that will allow them to grow in the future. The focus here is on those enterprises that can create jobs, because the reality is many people who are entrepreneurs are doing it because they don't have a choice. They would much rather have a job. And let's not kid ourselves that everyone is going to be a small entrepreneur, right? So actually, let's find those few that are talented enough to build a space where they can employ 10, 20, 30 people and give them the tools they need to create that space, because you know what? There's 10, 20, or 30 people who want a job. And recognize that not everyone is a job creator. Some people just need a place to do dignified work. The reason I started with this is that very often when we talk about poverty, we move immediately to the charitable hand up. And maybe let me use a sentence that I'll say one sentence and someone else can say the next one, and maybe I'll suggest a third one. Give a hungry man a fish and you feed him for a day. Who's got the next sentence? Okay, can anyone guess what the third one is? Interesting. I've got heading in the right. Okay. Any other? Okay, I've got one. Help him open a fishing net store and send his kids and grandkids to university. Right? So think beyond the subsistence level of it's just about the fish. The fish creates a market for fishing nets. The fishing net store will grow. As a community grows and the community does well, guess what? You've created not just an engine to get out of poverty or hunger for that person, but actually a path to building a prosperous life for themselves and investing in the next generation. So that's the story, I think, when you think about poverty and small enterprise. So let me that's the end of this example. Any questions about it on a factual basis before we move on to the next one, in terms of either what we're doing or what I've just laid out in terms of the power and role of small enterprise? Great. Right along. The next point is that the poor pay a lot for very basic things. Indeed, one of the features of being poor is you're asked to pay a lot of money for very little value in the marketplace. When you're rich, people line up to give you stuff. It's actually one of the bitter ironies of life. When you're poor, the solutions that are available to you are poorly suited to what you need and are often overly expensive. I'll give you a specific example from work that we did a few years ago. In Africa today, 589, let's call it 600 million people, because frankly, that's false precision. 600 million people have no access to electricity on the grid. That's the largest chunk of the 1.6 billion around the world who don't have access. So you all hear about a lot of investment in infrastructure and so on and so forth. I'll ask a question, it's a guess. I'd like you to make a guess. If every major dam, if every major power plant that's currently planned anywhere in Africa is built exactly on time over the next 5 years and comes on board exactly when we expect it to come on board, what do you think will happen to that 600 million number? Anyone want to guess? You're really pessimistic in that corner. Hold that thought, though. So his view is nothing. It'll stay at about 600 million. Any other guesses? Sorry? It'll go down to 300 million? Down to 100 million? Any other guesses? Zero.
It all depends. It might be a half or quarter, but then if you don't supply, have electricity lines and everything.
No, all of that. Assuming that you build the grid, you build all the dams, you build all the solar power plants, you build all the wind turbines, guess what's going to happen to this number over the next 10 years?
It won't change a lot because people won't be able to pay for it.
Okay, you are all absolutely wrong. It will increase to 900 million in 10 years' time. So we will not keep up. If every plan we have to expand the grid and centrally generate power for Africa, if all of that goes exactly to plan, yes, we are further behind than we were when we started. Now, what does this mean in the meantime? So let's hold on to that thought in your mind. Set that aside. This number here really caught my attention when I saw it. Today, across Africa alone, forget the rest of the developing world, across Africa alone, every year, households spend $10 billion just keeping some light in their house. They do that through candles, they do that through kerosene, they risk their health, they lose their lives and property through fire. And frankly, anyone who's tried to read in candlelight late into the night knows that it's not a great solution. And this is one of those interesting vicious cycles, because guess what? If you're the one studying by candlelight, you're not reading as clearly as the one studying under a clear electric light, which means you're doing less well in school, which means you're less likely to get to a good job, which means you're more likely to end up right back with your kids studying in candlelight and hoping that your house doesn't catch on fire. Right? Now, the other thing to keep in mind is this is one of the biggest uses of fossil fuels in Africa. So when we talk about carbon in the atmosphere, a good chunk of it is coming from the kerosene we're using to light our homes, and the candles we're using to light our homes. Now, we talked earlier about all the other sources of power out there, and the fact that ultimately they're not going to keep up with Africa's population growth. Now, let's be clear, I'm being a little bit pessimistic, like my realist friend in the corner. I'm just making fun of you. I think you made some good points. But even if it accelerates, the reality is for the bulk of households in rural Africa, the grid, that power line that's from a big power plant somewhere that brings electricity to your house is not the answer. Frankly, the grid is no longer the answer for much of the world anyway. And Africa then presents an opportunity to think about what comes next. Today, if you look at solar lighting, it's a clean, portable solution that could serve 49% of households at a lower cost than they currently pay. If you pay $50 today for a solar lighting system, and there are good solar lighting systems available today around that price coming out of China and India, you will have paid, or you will have saved the value of that lantern within a year. And from then on, you have free light that's cleaner, clearer, and better than what you had before. What does that suggest to you if you're a business person? Does that smell like a desperate place that you shouldn't be paying attention to? What does that $10 billion number there mean to you if you're a smart innovator with solar lighting technology? So what we did in this analysis of the lighting market in Africa is we highlighted how there was a vast under-realized commercial opportunity that had the ability to transform people's lives. And the value we brought was not in changing anything that was happening. It was getting large manufacturers, the Philips of the world, to say, well, actually one of the largest markets for us in the future is people we currently think of as uninteresting because they are poor. And if we get smart about how we deliver what they need, they will do better, and our shareholders will be quite happy with us. And so if you finish a sentence, the poor pay a lot for very little value. Anyone going out there to say that they want to try and do well while doing good has a lot of opportunities to choose from. And I chose to talk about lighting. We've seen the same dynamic in healthcare, where if you look at, for example, the treatment of diabetes in India, only 10% of the market in India is focused on by most conventional providers, but actually figuring out a way to deliver good, affordable diabetes treatment to the 900 million in the fastest growing diabetes country in the world will make a lot of difference to their lives, and it's fundamentally good business sense. Not charity, good business sense. Let me make this very concrete, and we'll look at the world of malaria. 29% of all deaths and 42% of child mortality in kids under 5 is caused by malaria. So that's the first thing. People die from malaria. It's a bad thing. But in addition, and the part that people don't then really think about as much, is what does it do to your economy? What does it do to a family? Because when malaria strikes, you have 48 hours to get to treatment, and you probably will lose a week or 2 weeks, maybe more, of work of the person who's sick, not mentioning the people who are looking after that person who is sick, right? That hits the businesses that you're not working in. It hits the communities that you're not engaged in, you're not paying taxes in, et cetera, et cetera. So malaria is a massive cost, and there's a lot of analysis out there of just how big a contribution malaria and similar diseases have had to poverty around the world. Now, the interesting thing is, we know how to fight and defeat malaria. Singapore used to be a malaria-prone area. How often does malaria take place in Singapore today? How many cases of malaria are you familiar with? 0. Or it's near eradication, right? The conditions in Mozambique, in many ways, climatically, are not hugely different from the conditions in Singapore. So why is it that Mozambique has a massive malaria burden and Singapore has a non-existent malaria burden, right? Now, I think the answer is in part something about a vicious cycle. You address malaria, it allows your working population to be productive, they make more money, they fight malaria more. Over time, you have the resources to fight it and eradicate it. The flip side, which is happening in Mozambique, is you're always one step behind. You don't have the resources because you're poor. You're poor because you're sick. You're sick because you don't have enough resources to fight the diseases, and on and on and on. How do you break out of that? So what we did, or what we're doing in Mozambique, is saying, let's find a few businesses that understand the cost of malaria to them. And in this case, we're looking at the mining industry. And there's businesses in the mining industry that say, in this particular district where we are mining, we can look at our books, and in terms of healthcare costs and the loss of productivity and so on, malaria is costing us something like $10 million a year. Just our business itself. Forget all of the costs of human life and so on, but just to our business, $10 million a year. Now, we don't know what to do about it, and frankly, we don't trust anyone who says they can fix it because people tell us a lot and they don't really deliver. And what we said is, let's actually rethink this. Let's treat this like an opportunity like any other. Let's treat this as an investment in Mozambique. Step 1, dear mining companies, how much would it be worth to you if in 5 years' time I could cut the burden of malaria here by 80%? And they did their math and said, well, we would be saving, well, let's call it $8 million a year. So it would be worth $8 million a year to us, maybe a little bit more, if in 4 years' time you came back and showed that you'd cut the prevalence of malaria in the area that my business operates by that much. You then say to them, can you promise me that if I do that, you will give me that $8 million? And they say, well, sure, we'll promise it. We don't have the money now. It's money we were going to spend anyway. You can have it. Fine. And then you take that commitment, and you go out there and say to an investor who wants to do good while investing their resources, rather than go out there and just give away bed nets to those people that you can afford to give bed nets to, would you invest in supporting a business that will actually work to reduce the amount of malaria in this area by 80%? Now, what's the advantage of doing it as an investment rather than a grant? It's actually the other way around, is that at the end of the 4 years, if I do it as a grant, my millions that were spent on eradicating malaria are gone. I've done it once. I've done it in one district. If I succeed right now, though, at the end of the 4 years, the mining company will give me back my money, and I can go find another district to eradicate malaria in. And not only that, but suddenly there's an opportunity for someone who just really, really, really knows how to fight malaria to just keep on doing it. Go from one place to the other. We take it from, my business is I take malaria from 90% prevalence to 10% prevalence. That's what I do. And if there's a commitment from someone to pay me in 4 years' time, I've got investors who will pay for me to do it. And when I leave, there's a benefit to the person who paid, but there's all the other benefits that no one is paying for. Kids not dying, the families that are able to think better about their livelihoods and so on. So by thinking about the causes of poverty as opportunities for investment and having the discipline of investors and using the tools of investment, there's a lot of challenges out there which we can directly address and transform. Right? Think about it. Think about creating a large and thriving team of people, a SWAT team that goes from country to country eradicating malaria. Right? And doesn't have to go out there and put their hat out to raise money because, you know what, they're a business. They know they're delivering value, and they're capturing that value. Any questions on this one?
Can I just ask a question?
One, then two. So we have set up an instrument called the Malaria Bond. We've secured the backing of several companies in Mozambique to pilot this. We are in the process of bringing it to market, and over the next 3 to 6 months expect to have the first efforts working on malaria on the ground underway. We've identified the providers and so on. So what we did in that case is we structured the transaction. We got the commitments from the mining companies. We got the support from the Mozambican government, and are now evaluating people who say that they can reduce malaria by that percentage. We'll go here, then there, then there.
My question was just going to be about the return to the investor. Are
Yes.
you doing this on the basis that it's a philanthropic investment, or that it's actually going to generate a rate of return to the investor?
Both. Robbie has been working on that. Or you were involved in it. My colleague Robbie is sitting in the corner there very quietly and was involved with LA in the past. But so she's actually going to correct me because she knows the actual detail and I'm kind of winging it. But the general answer is the investment can be structured in a number of different ways. You could say that it's zero return. You could say it's some negative return, but not negative 100%. If you think about it, when you give a pure grant, it's negative 100%. It's never coming back. If even a portion of that comes back as a result of success and you're able to put it back, you're already ahead of the game. And so the hope is for this opportunity, because it really depends on how much the corporate sponsors or your clients are willing to pay at the end, you could have any arrangement that ranges from this is an opportunity that you bring only to a development investor, all the way to saying, actually, the cost of malaria in this place is so ridiculously high, and the cost of eliminating malaria is actually relatively manageable. This is actually a profitable investment that you can take to any commercial investor. And actually, I don't think that we can say with any degree of certainty that I think there'll be opportunities all the way across that. We could be talking, and the interesting thing here is we're talking about malaria here. We could be talking about youth unemployment, and someone saying, I can bring youth and put them into the workplace and get them to have the skills that they need. And if I can do that for 4 or 5 years, what will you pay me? You could structure an investment like that. You could do it for education and say, I can raise reading levels at graduation by this much. What is it worth to you, the employer, to have the quality of your incoming students be at this level rather than the level they're at right now? And use that to the minute you show people that investing in things that they view purely as social challenges has the opportunity to generate a positive return for them, you then have the opportunity to go to social investors or even commercial investors, depending on what the issue is, and then say, you want to address this issue, why don't you at a minimum make sure that the money you put into this issue lives forever and keeps on doing what you want it to do, and in some cases generate enough of a profit from doing this that you attract even more people to invest in this. Instead of people thinking, I'll invest in a gun factory. Well, you know what? Eradicating malaria is a fantastic opportunity. I'm going to invest in that. There are 2 other questions on this side. 1, 2, 3. So that's a good point. So a couple of things. Fighting malaria is only partially about treatment. Actually, by the time you get to treatment, that's the most expensive way to deal with malaria. So it's cheap preventative measures are really where you want to go. So it's spraying and bed nets primarily, but treatment is important. A lot of one of the things people don't know about malaria is that the effectiveness of most traditional therapies for malaria is going down. The malaria parasite is building resistance. There's one class of drugs that currently works, which is they're based on a compound called artemisinin. And those compounds, there's a couple of companies that manufacture them, and indeed a lot of production of Artemisia, the plant that produces artemisinin, happens in Africa. And there's a few companies that do manufacture the drugs in Africa. So there's a whole other discussion we could have about building a pharmaceutical industry here and attracting investment and so on. I would think of that as a separate discussion from this, but you're thinking in the right way, which is to say, in each of these areas, there are chains of value that lead in different directions. There's people who could be generating jobs by manufacturing bed nets and make that their livelihood, or by fabricating the ACT therapies that will fight and starting to build an industrial base and so on. So it's a good idea, good insight. Not critical in this case because treatment is a small portion, but useful. You were next.